Don't mess this up. The last time Bitcoin pulled back like this in a bull market, it then went on and exploded 301% in just the coming few months. The altcoins around it at that time also went ballistic, seeing huge gains for those that had the nerve to hold on in times like this. This USDT chart, as well as other charts I'm going to show you in this video, hold the keys to where we are right now and that we could be just hours away from seeing a turnaround in the markets. Do me a favor, hit that like button. This is an important one. Now guys, it's fairly evident to see as I look through my comments down below and I see people talking across Twitter that the bull market's over and everyone's panicking because, we've got war breaking out and the macroeconomics look horrible and the fear and greed index is sliding away from greed into the fear area of the markets. You can then couple that with the ETF inflows, which are now at the second lowest day since these charts began. Another big indicator that fear is building in the markets. But I want you to think about this for a moment because El Crypto Prof brings up something very valuable here. The only ones panicking here are newbies and the perma-bears. I mean, we've already seen it in 2013, 2017, 2020. When Bitcoin reaches an all-time high, it pulls back, and then for a few weeks before then continuing upwards. And as with everything I see online and quotes like this, I'm like, let me go and check this out for myself. Right now, you can see that Bitcoin has pulled back since this high it put in a few weeks ago. It's down nearly 18, nearly 19%. And it did this after hitting and breaching all-time highs. So I was like, you know what? Let's go and plot the old all-time high, which was back in 2017. You can see that that price was around $19,400. We then, in 2020, moved all the way up, hit this line, and then guess what? We pulled back 19.5%. Familiar sounding number, right? And around this time, let me tell you a little story. I've been getting in for Bitcoin for the first time ever, down here at around $9,300. I saw some good growth and then, I kind of got carried away, thought things were going really well. Suddenly, the market hits a static period and pulls back aggressively. I'd already more than doubled my money, so guess what I did? Well, I sold after this dip. Dip comes back down to about 15 grand. I then see the price rally away from me, I then buy in, and I pretty much delete all of the profits that I'd been gaining over this period of time. And hopefully, if you're on the smarter side of things, then you'll learn from your mistakes. So I've learned from my mistakes, and that's why I'm bringing you this, because I don't want you to make the same mistakes that I did a few years ago. And I know, that's not enough, okay? That's not enough to go off. So what else have we got to talk about? Well, hopefully something, right? Well, luckily, we have this, the USDT dominance chart. And you're like, well, okay, what's this got to do with it? Well, think about this. When the markets are going well, you want to be in kind of riskier assets, right? You go to your Bitcoins and then afterwards you get a bit of confidence. You start going down to more and more degenerate, disgusting, dirty coins. You get into your meme coins and that's when everything's going crazy. You're very confident. As soon as everything starts to go wrong, people start to pull their money out of volatile assets and move towards stable assets, stable coins. USDT dominance, therefore, is an incredible indicator of where Bitcoin really is. And this here is a USDT dominance chart over the last 5 years. 5 years? No, 18. 6 years. Okay, over the last 6 years, it's been in this uptrend. Slowly kind of gaining dominance, having dips during bull markets. And now what's happened, as you can see, it's basically topped out. It's dropped back down, it's retested, it's come back down. And what I'm anticipating seeing is this reaching an area where we're about to see a resistance being hit. And then this falls. That falls like that, we are going to see an almighty bull market like you have never seen the likes of before. And if you're fortunate enough to be a subscriber to my channel, then you'll understand that I love a good buy zone. And I've been talking about how to find buy zones all the time. But we want to see USDT dominance going down right now. To calm, just to settle the nerves and make us feel a bit better about what's going on. Therefore, we can identify sell zones in the same way that we can identify buy zones. As you can see, I've drawn this very helpful big red box on the chart. And as you kind of zoom in further, you can see that there is actually an area just below this red box, which is far more of interest to it. Remember, on a buy zone, what we're looking for is consolidation before a big push up. This, therefore, would signify our buy zone. On a sell zone, it's the opposite. We see a bit of consolidation. Eventually, we see a drop. And then we know with a good degree of certainty, not exactly, but a good degree, that if we return into this zone, we get a sell-off again. Where do we get the sell-off? I hear you cry on the USDT dominance chart. Well, the more astute amongst you would have noticed that we are looking for big candles in a downwards direction, and we can see we had a sideways action, and now we're starting to run into this zone again. So what we're looking for is reaction, more confirmation in this zone that we might be getting a sell-off. Here's a good bit of confirmation here. You can see that we have big candles leading into this area, and then they start to shrink down. We start to get indecision candles like this, which is like a spinning top, I believe. Okay, call it what you want, but it has the same basically meaning. We're starting to see the buyers get exhausted as the sellers start to step in. I feel that if USDT dominance has any sort of another push back into this zone, this will set off another fall in the USDT dominance price. And that was on the 23rd of February. We saw that start to emerge. And if we go back to around the 23rd of February, what do we see on Bitcoin? Well, Bitcoin emerges out of this buy zone area here, which is very coincidental, isn't it? So yes, there is obviously a lot of bearish news and stuff across the markets. But what is this news really designed to do? Do you think it's there to help you make financial decisions, bearing in mind that your participation in any financial markets as a retail investor is simply to provide the liquidity to the large money who are in the game? If you start to understand it like that, then you probably would be with me on this argument. We are about to see a bit of a push towards the upside again. Bitcoin, you can see, also sitting in this zone, which some may out there like to call a buy zone. How would I think this is a buy zone? Well, look at this. Last time Bitcoin was in this zone, or the first time it was in this zone, in a very short space of time, about a week, it went up 24%. It added nearly $300 billion or more to its market cap. It then does it a second time when it gets back into here. Goes up around 16 to 20%. Again, that means that this is a good value zone for people who've got money to put $300 billion worth of money into the markets at those points. And you're like, well, yeah, that's retail. Retail came in. Well, actually, you're wrong. This is a chart from Benjamin Cowen, which talks about social metric risk. And I know that's a bit of a technical word for an afternoon where the sun's out. You'd rather be outside, you know, having your beer with the lads and whatever else. But this is really important. Social metric risk means basically this red line indicates the number of viewers and stuff who are viewing like crypto videos on YouTube and having interaction with the markets. The more the social risk, it means the more retail is invested, and the more retail are watching videos and consuming content. You'll notice the blue line being the Bitcoin price. In the last bull market, the social risk went from this area down here at the end of 2020 and suddenly rocketed up when we went to these highs. You'll see though that the social risk is all the way down here at 0.1, which is pretty much near where it started that massive leg up in the previous bull market. You can see once we came out of that dip, the social risk came down, which is what I was just showing you on that chart, and then suddenly, bang, all the way higher towards the upside. This is a really interesting and important metric. Does it guarantee anything? No. But if I've been sure of one thing over the years that I've been involved in this game, is that every time I get this feeling, this panic, and I see it across the markets, I realize that we are literally on the cusp of seeing the next leg up. And look, we're basically just testing the 20-week EMA. Every time we touch this EMA, we see a solid response from it. Occasionally, we might break down through it. This was the COVID crash. But after that, we broke towards the upside and we continued to find support on this line. Right now, let me show you where we sat. We are sat on that line. We have found support in this area. And right this second, you can see Bitcoin doing it. Okay, it's holding this area above 60k. It's trying to get down to this like liquidity area down around 59k. I think, you know, maybe at worst case we spike into an area down here and then we see a continuation. You can see the altcoins every time Bitcoin starts to see any sort of upside, we're seeing the altcoins reacting very positively, very strongly, and that tells me we need to be ready for what is coming next. And this is what the Scalping Pros basically had to say about each time we've seen a halving, which is literally happening right now. There's always volatility around halving events because it gets retail excited, it gets the markets excited about what might be coming up. It enables the market movers to manipulate prices in order to build up their positions in the ways that they want so that they're ready for the next move up. Right now, you can see the fourth halving. We are sat down in and around this green zone, and this again indicates that the altcoins could be well ready and primed for the next rally. And you're like, okay, fine. What do you mean by don't F this up? Well, the more I see people being like, you need to get out of the markets, you know, things are going to get much worse, that is always a big indicator that they're probably not going to get much worse. Usually the people who are saying that haven't got a clue. They've probably already lost all their money in like Coin or like Cat with Hat or some other stupid coin out there, and they're now just trying to drag other people down around them. Now, I don't want to just be perma bull on you, but this is a time that is very much worth being a perma bull, rather than when we're at these highs up here, which is when everyone else is trying to be a perma bull on you. So how you would F this up right now would be to start selling into the market. Remember, simply buy low, sell high. Right now, the price is relatively low compared to where it was a few weeks ago. For example, if you're in Solana, you could have got out up here at around $204. Solana is now re-backtesting this area around here, $133, which is around 36% down. Why would you sell 36% down when you weren't prepared to sell up here? And here's something else worth paying attention to. The Bitcoin dominance chart. Every time Bitcoin dominance starts to fall, it tends to mean we're moving into the next phase of the market, the altcoin season. As you can see, previously we've hit up in and around this area, admittedly not absolutely perfectly, and then we've had a good fall off. This was last altcoin season. We then see Bitcoin dominance starting to grow again through this early bull market, and right now we're running into resistance at this line. But not only that, but using the Fibonacci retracement tool, you can see we are now finding resistance at the 0.5. Typically after a big move, you get a correction back to the 0.5 and then a continuation in the same direction. Pair all these things together, and I think that we are about to enter into a very exciting phase of the market, which is going to take everyone who's been panicking by absolute surprise. So what have I been doing? Well, I told you multiple times this week, if you subscribe, that I've been buying into certain coins. Unfortunately, one of the ones I've been telling you is my biggest bag is actually BVM, which currently sits at all-time highs while the rest of the market is melting. But yes, I've talked about lots of other coins as well that are having decent, healthy pullbacks into interesting areas to get into. But most importantly, and I recommend watching this next, I made this video the other day on how to find the next winning coins. What's happening right now is a lot of coins are launching, new coins are launching. And it is a horrible time to launch a coin right now, because 2 or 3 weeks ago, you saw projects absolutely exploding towards the upside when they launched. Right now, you've seen a bunch of really top projects launching, but there's not enough liquidity in the market because everyone's scared. They don't want to be aping into these projects, which means you can find a lot of new coins following that method, that when they pull back into a decent buy zone area, you then have access to being able to buy at decent discounts. And that's how I found BVM, how I found Mojo, BFi, and many others. So here's the long and short, and I'm going to put my neck out on a block right now and tell you that I think we're going to be pretty much heading higher from around now. We're not going to see a significant amount of downside. This is a bold statement, and it could really lead to people getting really upset with me. But ultimately, what I'm telling you right now is when markets are low, it's a good time to get in. Markets are high, then it's potentially a good time to get out. So don't act irrationally on your fear. Understand the sentiments, understand what's going on in the wider game that's at play right now, and it will help you remain calm and then get the position that you need to be holding from doing your own due diligence. What a great time, guys. But I'm not hanging around, okay? Look at these wicks. Last time we saw a wick like this from the Bitcoin USD, we saw from that dip all the way up. It went up 85% in the space of a month, just over a month, okay? We've seen a few other wicks like this. We see spikes. Yeah, we had that kind of pump and then a dump later on. And you can see, you know, after these kind of rallies, we see big pushes every time. And they were extremely quick. Eventually, everyone decided the price was right. Bitcoin was on the move again. And many people got left behind in various areas like this. Now, I'm pleased to say that today's video is sponsored by Origin Protocol. Now, I myself, during periods of time like this, have started to look at holding less risky assets. I'm talking the likes of Ethereum and various stablecoins. But it's a bull market. It's crypto. I don't want to just hold these assets and not earn any rewards on them. So I started to look into liquid staking. Liquid staking is basically where you can stake tokens and in return get a token or a credit that you can then go and use to work in different markets. That means that you can stake and earn rewards from staking while still operating and using your other rewards to earn different rewards. That might all be a bit confusing. It's probably designed to be that way to keep many of the retailers out, but Origin Protocol makes it all extremely easy. Also, it means that you don't have to lock away your tokens for long extended periods of time, so you can earn yields and remove your tokens whenever you wish. Now you can see you can also do things like staking your NFTs and staking various different tokens, such as staking Ethereum and other things. Now Origin token at the moment has a market cap of $84.7 million, which is fairly decent. And I did cover this a couple of months ago on a video when it was down in this area around here. And what we're seeing right now is a break out of this consolidation zone, where you can see it's starting to kind of break beyond this consolidation zone, comes back for a retest of this area, and right now you're starting to see that get bought up. Origin Protocol looking pretty bullish from a price perspective. So what's the point in using a platform like this? Well, many of you I'm sure out there are holding Ethereum. Ethereum has a pretty good potential, in my opinion, over the coming weeks, although that's obviously not financial advice, along with everything else I've said today. Now, what we can see right now is you can earn an additional 3.7% every 30 days. And that might not sound like much, but 3.7% in Ethereum, assuming that Ethereum could well do maybe a 3 or a 4x from here, means that actually that 3.7% is more like being able to earn a 12 to 15% on my Ethereum tokens paid in Ethereum, which is pretty damn good. So if I'm holding Ethereum, I might as well be staking it using a platform like this already. Now you can see they basically work with other yield farming platforms such as Lido, Rocket Pool, Curve Finance, and some of the other biggest platforms in the game. It's all fully collateralized, which is a really important term because it means you can stake your tokens and they're not going to go and spend your tokens on whatever else and not be able to give you back at the end of the day. So only use fully collateralized platforms for staking and things like that. It's extremely important. Now this is pretty much how it works. This is a MetaMask. You hold your tokens in there and you can see that the number is increasing over time because it's auto compounding. That's something else. So it's adding like to 3.5% over a month. That 3.5% then gets 3.5% of the 3.5%, and over time it's adding up together. So over a year, the compound effect actually means it's quite a significant percentage gained. No staking, no lockups, obviously very cool. And you can either see for a 30-day trailing APY, you can get 3.7%, or on 7 days, it's 3.57%. It's all fully transparent. You can see all the sources of all of the different liquidity being provided, and you can see where all their collateral is from. Now, simply the way it works is you go and stake Ethereum, or you go and stake a USDT or a USDC, and then in return, you're going to get a token back, like a 10 ETH or a 10 USD, okay? This is basically an Origin ETH or Origin USD. These can then be used for other things while you are earning rewards. What other things? Well, you can go and earn rewards on these in other platforms as a way to capitalize on this opportunity and grow your yield even more. Now, I highly recommend you go check them out. They're linked down below in the description so you can go and find out more about that token. Also, go and give them a follow on Twitter and you can keep up to date with all of the latest news, such as the sellbacks and all the community contributions and things that are going on over there. Guys, I hope you enjoyed that quick update today. If you're finding yourself panicking, stressing out, then calm down. You're in the right place. You're doing the right thing right now. And the only way you're going to succeed in this market is by doing the opposite from the masses and staying calm. And everyone else out there is panicking. Hit that like button. And I look forward to seeing you tomorrow in another video. Bye-bye.